So I spoke with Eliran Glazer. He's the CFO of Monday.com. It's a software company out of Israel. And I'm really impressed. They have roughly $1 billion in cash. And the cash flow is positive. That means they add more and more cash into their pockets. But on a US GAAP basis, they're still losing money. But it looks like the losses go down and they are close to that point where the US GAAP is also profitable. That means they are completely profitable. It could be they are growing nicely, around 40+% in the last quarter. And I have no business to do with them at all. I thought it's an interesting stock. They went to the stock market. First they went down. Now they are moving lightly up. The numbers I think is really interesting. Lots of cash. They have great customers, really blue chip companies. They are gaining more and more, getting more and more customers on board. And it's a project management software. So you can control and speed up projects in companies and the workflow. You can control it, improve it, and look at it. And it's more transparent. It's more open, and you see what your colleagues do on a project. And maybe if a project gets stuck, you can see who is responsible for it. So it's very interesting. Monday.com. I don't own the stock. I don't have nothing to do with them. I asked them if the CFO is available, and they said yes. And I was there before a while ago, I think over a year. And I thought like, hey guys, just take a look at it. It's an interesting stock. I don't know what will happen with it. The negative side of it, it's still losing money based on US GAAP. The other thing is it's highly valued, 10 times the market cap means it's over 10 times revenue. But it's there's also, it has some interesting points, what I mentioned before. Take a look at it. Here's an interview with the CFO and tell me what you think. Please tell me in the comments what you think about the stock. There are not many companies that grow the revenue in that kind of manner. And some companies grow the revenue lightly, like low single digits, because they increase the price, but they don't gain volume or new customers. But those guys, Monday.com, they get a lot of new customers and they go on board. And yeah, take a look and let me know.
Thank you, Tim. It's great seeing you again. I'm happy to speak.
Yeah, it was amazing to meet you and see the office set up. I was impressed. You had like a really, the impressive thing was it was kind of a new economy vibe, and people did their things, and people did networking, and it didn't look so stressful. But I know people work hard on the performance of your company, and I want to know the stock is pretty doing well. I mean, at first, when you came public, the stock went down, but since many months, the stock is really strong in a weak market, which looks good.
Yeah, so I think, we spoke a year and a half ago. I think that what was an advantage for us is that we are able to be recognized as a company that is differentiated from the space that we are operating in. So if you compare to other names, I think post-IPO, and we went public as a reminder on June 2021, at first it was a different market condition for everyone. Multiples were very high. I think after some time, the market has changed due to macroeconomic headwinds. And eventually we said it, and we continue to demonstrate that we are performing well. And we are dependent on ourselves. If you perform well and you execute well, I believe the share price will kind of remain stable and will be solid, for a longer time.
Yeah. What I like about your story is also that the founders are invested. They own a piece of your company, not too small, and it seems like to be a long-term story. But what happens if you get an offer? Have you ever thought about that? The industry is moving. You saw today or yesterday there was this takeover. Cisco took over Splunk. Okay. And there are a lot of other deals. Salesforce, they're all looking around, probably other competitors. If there is a great offer, would you take a look at it?
I don't think we're going to take a look at it. Roy and Eraz, as you said, both of them, Roy Man and Eran Zilman, co-founders and co-CEO, are very committed to the company. They have a lot of shares. And also they are very passionate about what we are doing. We believe that we are sitting or having a great opportunity in front of us. And we would like to take advantage and try to grow and scale the company as much as we can. So for us, we're not for sale. I think also maybe, Tim, to add that some of the companies that are being bought, because the market has changed a lot, multiples came down, it's becoming more challenging to get access to capital due to interest rates and liquidation issues. Some of the companies that were either standalone or expected to go public in the future, the private ones, are potentially prefer to be acquired, which is, M&A is getting stronger when prices go down, and there is limit to how much money you can raise.
Yeah. And you are in a comfortable situation. You have almost $1 billion in cash, and the cash last quarter went even up because you have a nice cash flow machine. And the losses went down. What is the planning on the cash flow basis, your cash situation? Are you careful with your spending and you want to keep the $1 billion roughly in cash, or what's the planning there? Or you are more aggressive in investing and building out?
Yeah, so I think we have proven to be cash flow positive since we went public, which is also very rare, close to $1 billion in cash. We would like to invest the cash. So what we said is that in the last earning call in Q2, we said that we are going to be around 20% at the end of the year. We're going to be high teens in terms of cash flow as percentage of revenue in Q3. We believe that we are going to continue to be efficient. I think for us, there are two things. One is we continue to invest in bringing additional people, additional talent, investing in places where we can drive further growth. And second, we are building the corporate development kind of division. This is early days, but we would like to build this muscle and take advantage of the fact that potentially next year there are going to be some opportunities in the market for us to do tuck-in acquisitions, such as acceleration of roadmap, complementary technology to our products, acquire potentially. These are our plans.
Yeah. Do you have a lot of targets on the desk already you take a look at, or not so much?
Not so much, because we are just getting started. I can tell you that we get a lot of requests from companies, from target companies that are suggesting themselves to us and saying, you should look at us. We have this solution. Across the board, it's coming from a productivity company, AI companies, and other companies in our space or adjacent space to us.
Yeah, and your target would be rather small than large. You don't want to be too aggressive, I guess, right?
Yeah, it's a great question. I don't think we want to buy revenue or customers. We would probably go on, I would say, tens of millions of dollars. There is also a successful acquisition is always a challenge, PMI, post-merger integration. And, you need to make sure that if you buy a company, it integrates well into your business, but not only from the operational side, also from the cultural side.
Yeah. Sometimes they offer you also maybe an apple with a worm in it, and they sell you difficult situations. Because you always have to ask the question, what you mentioned before, why would somebody sell a great company? And there's always a reason for it, right?
Yeah, I think, probably 2 years ago, many said, we are going to be growing organically. We don't need to be acquired. Potentially, we raise funds. But as I said earlier, with interest rates getting to 4 and 5%, it's becoming expensive to grow a company. I also think with regards to AI, many of the companies that are now being kind of in a challenging situation are worried that potentially the AI companies that can develop all kinds of technology in relatively fast pace may be putting a situation or creating a threat to many startups that used to grow their business over a longer time.
Yeah, are you worried with AI? For you, is that a thing for you? A dangerous.
Yeah. Sorry, say again.
Is it dangerous for your company, AI developments?
No, I don't think so. I would say that for established company, and we are established company in the productivity and technology and work management applications, it's actually, we see it as an opportunity because we can already embedding AI capabilities in our platform. We have developers that developing AI applications on our marketplace. We are we introduced AI assistant, which is something that we offer our customers. If you want to automate your task generation, if you want to compose emails in the world of CRM, if you want to build formulas on the Monday platform, then you can use us. But even for us internally, we have a chatbot of AI that automatically reply to questions, and we have improving sales efficiency capabilities. Also, to remind you, we have a BI system called BigBrain, and BigBrain is a BI system that takes a lot of data from multiple places within the organization. So we are building an AI layer on BigBrain in order to kind of enhance it and make it stronger, even of what it is now.
Yeah, is the AI solution you use, is it all internally developed or you buy externally too? Like you use ChatGPT or some other solutions?
We use ChatGPT or other solutions. I think it's out there, big opportunity for us to benefit from what was already developed.
Yeah. And you could be, I think, profitable if you wanted, because your sales and marketing is quite still large. Like the last 3 months was 107 million. You built that out. If you wanted, you could cut there and you would be like quickly profitable, right? You could be, right?
So we are already. So we said that we are going to be profitable by, at the end of this year. So when we gave the guidance to fiscal year 2023, we said that we are going to be in the area of around $710 to $715 million. We said in revenues, we said that we are going to be profitable, and we said that we are going to be cash flow positive again for the third year in a row. So, it's something that we already achieved. Now, to be fair, if you ask me what is the number one priority for us, is to continue to invest. So if I have to think about what will be the plan for the next few years, I would prefer to invest more in driving further growth and being more innovative rather than continue to improve the profitability. Because when we went public, we said that we are going to be profitable by 2025, and we are 2 years in advance of that. But it's not that we are going to continue to increase it in the way we did it, because I think, huge market in front of us. We need to invest and drive further growth, not only looking at next year, but also in the next 5 years.
Yeah, but profitability is not based on US GAAP yet. It's I think it was $7 million loss in the second quarter, roughly.
Yeah.
But on non-US GAAP, okay. But this could also happen, right? On US GAAP profitable. It comes next step then, right? The profits there.
Correct. So what we believe is that in the next 2 years, at the end of 2025, we're probably also going to be profitable in terms of GAAP.
Yeah. Okay. And what if somebody would say, like a critic would say, why do you spend so much on sales and marketing? It's a huge number, 107 million in 3 months. Is that really needed? Is it needed to build that even further out?
Yeah, I would tell him, so first of all, look at our unit economics. We are improving operating margin and operating efficiency while we continue to grow the numbers. We reduced the percentage of sales and marketing from total revenue, to be in the high 50s, and we'll continue to do so. I think that if you want to build a long-term company that has a sustainable growth, a model that works and proving to be efficient, and we prove to be efficient, why not do it? If you think about the market where we operate, we are, as I said at the beginning of the call, we are becoming one of the market leaders. If you compare to other names in the industry, we are, doing it in a very efficient model. And for us, it's an opportunity, and I think it would be a missed opportunity if we're not going to continue to invest. So as long as we see good returns from both sales and marketing, I think it would be wise to invest.
Where's the focus on the marketing sales? On the middle segment, small companies, mid-sized, or really the blue chip companies out of the Dow Jones and those guys? What is your focus now?
Yeah, so we have already 59% of the Fortune 500 companies that are our customers. I would say that, to be very transparent, our strength is around SMBs and mid-market. This is, by the way, an underpenetrated, according to our understanding, an underpenetrated market that is huge. We continue to grow very well on the enterprise accounts, but it's not the enterprise that you see maybe for Microsoft and Salesforce. We grow very fast there. We define enterprise accounts as customers of more than $50,000, and we have close to 2,000 accounts already. The focus is going to continue to strengthen our position at all segments, but continue to go up market and achieving, potentially next year more of, we have few $1 million deals. We would like to increase this number. We would like to be in the core of the operation and, further expand within organizations that are already our customers and new customers.
What do you mean a few $1 million deals? What does that mean?
What does it mean? That, one of the things for us is to have from one customer more than $1 million contract. Yeah. So we started, just as a reminder, Monday started as a bottom up. Usually we are being bought by groups, by teams. So it used to be tens of dollars in the early days. Now it's hundreds of thousands of dollars, and we have very few $1 million deals. We want to make sure that we achieve more and more and continue to grow the ACV per customer, getting more $1 million deals.
Can you mention some? Some are public, right? You announced them in press releases. Can you talk about a few customers that are really important to your business?
No, so maybe you are based in Germany. Maybe I will mention customers like Bauer Media Group that are a big customer, and Software AG, SAP, obviously, Sport Group Holding. We do have customers like Tesla. We do have Coca-Cola. We have big names that are very well familiar within the industry. Yeah. By the way, all the customers can be seen on our website. So, if you go, yeah.
And how is the improvement if a company sets up your system? And how much faster get projects done? Can you really see an effect then? Can you measure it? The success of your software?
Yeah, so I would say that once you implement Monday and you unlock the value of the software, you can replace a lot of manual work, a lot of repetitive tasks that you are doing over the day. Just to give an example, emails, messages, whiteboards, meetings. So many of these manual tasks can be replaced by our platform. Everything can be automated on the board of Monday and which has an access to multiple users within the organization. So we see a lot of companies being becoming more efficient, and productivity is going up using Monday. And this is something that, we have close to 200,000 customers, which is a huge number. I think last time when we spoke, we had much less. We continue to have a very healthy top of funnel activity. So many of them are using Monday and improving their internal processes in a very significant way.
Which countries are your most important? I guess US, right? And then which countries and regions are the most important to you?
So we have 48% of our revenues are coming from the US, 25% are coming from Europe, and we are really very diversified in almost 200 geographies. So, Asia Pacific is super important. Latin America is important. Because it's a software that can be used online, it can be reached from everywhere. And but definitely the US is a huge market. Europe is a big market, and Latin America as well.
Yeah. And in regards to hacking, how safe is this? Do you work to prevent, how much manpower do you put in your software? How dangerous is it? Bad actors, could they go in your system?
So since we became public, and even before that, we are very focused on making sure that our system is very safe. security is one of the number one priorities. We have a CISO in the company that built a very strong team. We are doing penetration tests. We are doing, ransom drills. We are doing, hiring people to do all kind of hacking to Monday to make sure that so there is a lot of investment that we are doing in companies that either we hire them to try and penetrate to Monday, either we work with them, security and cybersecurity companies, and Israel also is very strong in cybersecurity, so we have a lot of the talent in Israel, but this is something that is really, really important for us.
Yeah, well, where do you hire right now, building out your staff? Which offices is the most needed staff?
We are, as I said, we are now around 1,700 employees. I would say 65% are in Israel, about 1,000. About 500 are in America, mostly in New York. We have people in London. We have people in Australia. I would say that around product and R&D, we would probably hire the people in Israel. But for sales, marketing, operations, and things that are, groups that are customer facing, I would say that we will hire them around other countries outside of Israel, mostly Europe, US, and Asia Pacific.
Yeah.
Yeah.
And is it good? Is it easy to find talent in Israel, or is it difficult?
Good people are always hard to find. It's strong people, because we believe in, one of the reasons why we are being successful is we provide full ownership. We ask people to take responsibility. We are trying to operate in a way that the organization is flat. You make your own decisions, you make your own progress. So it's hard to find good people. I would say because of the macroeconomy, in some places it's slightly easier. Slightly, maybe in sales and marketing, but overall, it's not like it used to be 2 years ago when everybody were fighting for talent. It's better, but good people are always difficult to find. Maybe just to say one thing to your question earlier, you said how we are, helping organizations that are using us in becoming more efficient. So there is something called CRN Impact Awards, and McDonald's acknowledged us as a winner, because we saved McDonald's 1,200 hours per month. So this was a PR that was published, and it was really, McDonald's is obviously a big name. They are using Monday, a big customer of Monday, and they published, there was a PR about the fact that we are saving them a lot of hours and improving efficiency and productivity.
Yeah, that's amazing. I also have some friends and colleagues. They use Monday.com. They know your company, and they work with it every day, kind of. And how is home office for your company? Has anything changed, or how is your policy with home office for your staff?
So home office is one of the I think things that starting to kind of getting back to the office. So we are trying to be flexible with employees. So we want employees to be 3 days in the office and 2 days at home, because still flexible, but we're also very mindful to what's going on within the market, making sure that, on one hand, we are providing the right work environment for employees, but also making sure that they have an opportunity to engage. But currently 3 days in the office and 2 days at home.
Yeah. How is it talking to investors right now? The stock market is a little weak. There are a lot of worries with the economy. Inflation is still seems like a problem, the war and stuff. How is it talking to investors? Well, when you have a lot of talks with them, how are they more critical, more skeptical, or?
So 2 weeks ago we were in 2 conferences. One of the CEOs was with the head of product and R&D in San Francisco in the Goldman Sachs conference. I was in New York with the other CEO. We have 2 CEOs, as a reminder, in New York in the City conference. I think we are still getting our story is still. Investors are now seeing us as differentiated from the names that they used to kind of compare us to. So in a way, we are still seeing a positive kind of engagement with investors. We also demonstrated that we perform well, execution was well. There is acknowledgement that the market is still not out of the woods. It's not out of there is some volatility. Some companies are still finding it difficult to execute. So conversations are relatively good. I can say that they are good. The numbers are good. So conversations are good. They are seeing that we are, investing in technology. We are innovative. So going okay. I can't complain on this front.
Yeah. There are not many companies that grow 42%, right? That is not easy, right?
Yeah, and also to do it in an efficient manner. You can grow, if you remember, Tim, like when we spoke earlier a year ago, many companies do growth at all costs. So you can invest a lot to grow the business, but then your bottom line is suffering from high losses because you have to invest a lot. We're able to grow 42% while achieving improved efficiency and operating margins, positive operating margins, and it's becoming even more challenging. So I think there is acknowledgement and recognition of the fact that we are basically doing it in an efficient way.
How is stock compensation? That is a difficult thing. It's great to motivate leaders, and on the other side, you have a huge, you spread out the stock, and how do you watch that? What is your policy there?
So I think that we demonstrated as well that we are also very good in maintaining share-based compensation as a reasonable percentage of the revenue. We were able to reduce share-based compensation significantly over time. We gave a lot of options before we went public, and we said that post IPO, and we are a public company, will be more mindful on how much we are giving, to whom we are giving, and we said that we would like to make sure that burn-out and dilution is not going to be very high, and we'll continue to improve this over time. So we, as we are getting more mature, we want to make sure that we are balancing it. And so far, we're doing well on that front as well. We are not granting big grants and creating very high dilutions. We're actually reducing the percentage and balancing it, in a good way, I think.
Well, what is a stock-based compensation, like a range of your salary? Is it 10, 20% on top of it, or?
It's really depend on the level. So we did a study. It's very important for us to do study, with companies like Radford, with WF Cook. We want to understand the benchmark, what's going on in the market. Bear in mind that when you have high demand for employees, like what it used to be 2 years ago, then your flexibility is limited. But on the other end, we don't want to be, on the other extreme when the market has become more challenging. So it depends on the level. We are making sure we are looking at amounts. So for example, we say if you are just given an example, it's not necessary. If you are level F director with 10 years experience, we want to make sure that you will get an amount, say $100,000 over 4 years, because we want to make it meaningful to you. Or it can be replaced with bonuses. There is two ways. We are looking at total compensation, so it can be either or. We're trying to make sure that your base salary plus your equity and bonus, if you have, will be at the right benchmark within the market, maybe slightly up if you want to make sure that you are always attractive to employees. Yeah.
And do you planning opening up new offices worldwide in some regions, or how is the planning there?
So we opened 3 offices in the US, like Chicago, Denver, in places where we don't have employees. We use partners, like places like Germany, like France. But definitely we are looking at, in the next few years, I think we get to a point where in order to scale, we need to open potentially more offices around the world to serve, customers in places. Again, Germany can be a place, France can be a place, Japan, we opened an office in Brazil. So wherever there is like a global reach to a big potential big number of customers, and there is interest, then we are kind of following that front and opening an office. But we have to see the interest first in order to make this is efficient.
And the office is for what? For sales and marketing, or for IT help and support?
Yeah, you would mostly see offices for sales, marketing, customer success, customer support. We have an office in Poland where you have like IT and R&D people, but it would be mostly around customer facing. Australia, we have almost 100 people in Australia. We have a small office in Singapore, but only to support the sales and marketing mostly.
Yeah. How do you feel with the stock price? I know it's difficult to comment, but overall, do you feel well with where your stock is $157 and it's very stable. It's very stable. Like,
yeah, I think it kind of equals to a company value of around $7.6 billion. So I use, in order to be kind of more agnostic to the share price, I'm looking at multiples. So, there is always the multiples kinds of way, which in companies like us, usually you would take the next 12 months revenue or the assumption, and you would multiply it by certain amount of, let's say 10, 5, 6, it depends on what industry you are. And also you take into account cash. So if you are, for example, our revenue this year, we said it's going to be, let's say around $700+ million. So a valuation of 7.6 with $1 billion in cash represent, say, a multiple of 9x, 9 times 7 plus the $1 billion. So I think in times like this, to be in a multiple of 9, 10 is a good multiple to be in. It's not the 15, 20 of 2 years ago, but I think it's a very good place to be in when you also compare to other names in the industry.
So you feel well about it? Okay, that's great.
I feel good.
All right. Is there something else we should talk about to add about your story and what's happening?
Yeah, I think one thing I would say it's probably the fact that we continue to invest in innovation. So a few things that we did is we are strengthening the platform called MondayDB. We released the MondayDB 1.0. This is a platform enhancement that will allow customers to have, upload the boards 5x faster. And we're going to continue to invest in it and improve scale, performance, because we want the big customers to use Monday as in the way they deem appropriate, and they take it to the limits. We are developing applications on the platform itself that are in the core of the operation of businesses. We have Monday CRM, a very successful launch last year. We have Monday Dev that is also becoming a very successful new product. And we want to make sure that, Monday will be in the core of the organizations that are using us. And for every application or for every business need, we will provide a solution. If you think about this, and this is something that is very important to say about Monday, and maybe with that I will end. Many companies are selling software or solution that can be very rigid. In Monday, you have to think about it the other way around. We provide you a building blocks, like a Lego bricks, that you can build any solution that you want. So it's not necessarily that we are selling you a certain product or solution that we think is the product. You basically determine or dictate to us what you want, because you can build an hotel chain management, you can build a real estate management software, you can build, you can run fleets, you can of trucks, you can work with Tesla, you can work with Coca-Cola. And this is the beauty of Monday. You are servicing segments from mid-market enterprise into SMBs, and customers are using Monday in very creative ways. And this is something that we are very proud of. It's very unique and driving the success of Monday.
And is it a goal to be implemented in a Salesforce solution or SAP solution? Is that a goal?
Yeah, definitely. So Monday CRM is successful in two ways. One is as a standalone. Customers are, you're using few CRM softwares. You can use Excel is a CRM software. You can use Pipedrive, you can use Zoho. And once we launched the Monday CRM, we actually became very popular. And if you look at the Magic Quadrant of G2 Crowd, you will see us on the top right next to companies like HubSpot and Salesforce. But on the other end, we are also cooperating. Our best integration, our most successful integration is with Salesforce. So if you think about it, Salesforce is the system of record for organizations in sales. But if I'm the CFO and the legal team and the operations team would like to get data from this, either you buy additional licenses from Salesforce, which can be expensive, will require customization, or you can buy Monday. Monday is integrated with Salesforce. It will be a workflow. It will be the conduit that will take all the data from Salesforce and will connect it to other parts of the organizations, to other divisions. We call it, a connective tissue. And this is something that became very successful, and we are seeing it more and more in usage. So we are benefiting from these two kind of directions or dimensions of usage.
Yeah. What's the average price per customer user per month? How much do they need to pay for your software?
No, it depends on the pricing. You have, you have a price list. Usually it would be, there is, for the lower tiers, basic and standard, it will be $8 to $10. For Pro, it would be $16 to $19, it depends. And for Enterprise, it can be up to $40. We are also, it's important question, because we also, now with all the offering that we are doing, we will also think about how we package solutions and price it in a way that will fit the needs of all organizations. And more than 85% of our revenue is coming from Pro and Enterprise tiers, which are the big customers.
Did you increase the price with the inflation, or it's stable the last couple of years?
So the last couple of years, what we did is only kind of took a legacy old pricing customers and moved them to the newest pricing, which is not very significant. It's around 1% of our total ARR per year. But in future, next year, we didn't increase due to inflation. We wanted to make sure that if we increase prices, we provide value to the customers, and we didn't want to take advantage of the fact now that some of the customers are struggling. But definitely, I think that next year we would be looking at all kinds of pricing scheme to make sure that we have pricing that is appealing to the customers, in line with market benchmark, and also makes sense to the value that we provide.
Okay, so it might go up then a little bit, but not too aggressively, I guess. Mm-hmm.
Yeah.
Okay. Yes, thank you very much for the update.